ask yourself, why would a half a dozen commercial banks have the largest short position in silver of any commodity traded on COMEX? It's a concentrated short position. There's nothing even close to it. And I think it has to do with silver's role in the military industrial complex, in its need for the building of high-tech weaponry, namely the missiles and aerospace, that the Silver Institute conveniently has omitted from their supply-demand fundamentals. If you believe that the military industrial complex is as powerful or more so than Washington, then understand this is why they hold it down. And they hold down the price of gold because it's really the opposite of the bond market. It is the opposite of our system.
Silver is a valuable metal not only for its lustrous and appealing appearance, ideal for crafting exquisite jewelry and accessories, but also for its exceptional conductivity, which enables it to be used for numerous industrial applications. What truly captivates investors, however, is silver's relative scarcity. According to the US Geological Survey, around 1.74 million metric tons of silver have been mined globally, with at least 90% of it lost forever. This has led many analysts and financial commentators to argue that the price of silver should be significantly higher than it is today. While silver's applications in jewelry, electronics, medicine, solar energy, electric vehicles, and green energy storage are widely recognized and well documented, its military uses remain less known. Experts suggest this is due to a concerted effort by government agencies, central banks, and metal exchanges to downplay silver's true value and suppress its price. The persistence and systematic manipulation of gold and silver prices is a frequently and hotly debated topic in the precious metals and resource sectors. It is widely believed that the silver market is particularly targeted, with big banks engaging in large naked short selling and high-frequency trading to suppress the metal's price. This manipulation is often cited as the reason for silver's relatively low prices and the unusually high gold-to-silver ratio. Despite the fines and convictions of two former precious metals traders at JP Morgan, such practices continue, causing significant disappointment for investors who have high expectations for their holdings. However, there is a growing belief among metals investors that we are nearing the end of these unethical and fraudulent activities by JP Morgan and others. According to Andy Schectman, a renowned bullion dealer and president of Miles Franklin Precious Metals, the constant manipulation of gold and silver prices was allowed to continue for so long because of the West's dominance over the rest of the world. However, we are now witnessing an uprising of countries that have so far proven that they are coordinated, resourceful, and sophisticated enough to end this dominance and free every sector it suppresses. We will present clips from Andy's recent interview with Capitalcosm. Please share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I think that gold and silver will go higher than anyone thinks possible once all of this becomes more realized in the mainstream, let alone just the people like me who are out there screaming that this is all not true. And it isn't true. If you dig a little bit and look under the covers, you can see that what is being said really isn't true. The biggest money in the world, I think, has come to a conclusion that assets, commodities, are more valuable than currency right now. And I really do believe the gold and silver markets are playing by a different set of rules. And that's going to catch a lot of people off guard when this starts to fully accentuate itself in an environment where there is way more paper contracts issued than the bars backing it, which is distorting the real value, the price discovery, and the real supply-demand imbalance. And when that breaks, which I think we've never been closer to it, because of the drive to remove counterparty risk, because, I mean, I don't want to ramble too much. I have a bad habit of doing that, but look at India. Not only did India buy more gold, 1.5 times what they bought all of last year, they brought back 100 metric tons from the Bank of England. They don't want the counterparty risk. Saudi Arabia and Egypt and half a dozen African countries just repatriated all of their gold from the New York Fed, the Bundesbank from Germany, the Dutch National Bank, Bank of the Czech National Bank, the Bank of Turkey, Hungary, Poland, Austria. They all brought their gold back over the last few years from the Bank of England and the New York Fed, and they're all buying it in a very private manner. remove counterparty liability, counterparty risk. So when this goes, it will go in a manner that catches people completely and totally off guard. And so, yeah, I think don't listen to what they're saying. Look at what they're doing, I guess is the easiest way to say it. Precious metals are two of the only asset classes that haven't been distorted by suppression of interest rates and all the money that's poured into it because of the huge suppression on the LBMA and COMEX. Give you an example of what I mean by the huge suppression and why I said I think that the banks are in trouble in the silver market. So the LBMA says that they trade 292 million ounces of silver per day, 20 million ounces of gold per day. Yet they have also recently admitted in a survey that was done with the bullion banks, those numbers are understated by a factor of 10 times. Because if I sell you 20 contracts and I buy 10, that's a net 10. Instead of the 30 contracts that I traded, it's only the net. And so they're saying that it's 10 times the amount of contracts traded. So that would mean that they are trading 2,920,000,000 ounces of silver per day in London, which is 3.5 times the global mining supply, 3.5 times per day. That means that they're trading not 20 million ounces, but 200 million ounces of gold per day. The majority of all of these contracts are just promises to deliver in a world where none of these companies stand for delivery. None of these entities stand for delivery until they do, and they have been. And that's why you see all of the exchanges being bled dry. The distortions created by a marketplace that rehypothecates and massively rehypothecates all of the contracts being sold. The COMEX is at 1,700% rehypothecation in silver, less than that in gold. But the point of it is that you have a situation where these markets, these Western markets, have controlled the prices of commodities, and in particular gold and silver, because they represent the antithesis to the Western system, where if gold and silver were flying, it would signal problems inherently within the system. So they would suppress the price of gold and silver by issuing copious amounts of paper contracts that mitigate the rise. You can hold the price down by continually shorting and shorting and shorting and shorting all of these contracts because you're a bullion bank with unlimited money.
The manipulation and suppression of gold and silver prices have been ongoing for decades, but Andy says the jig is coming up. Countries are now coordinated, wealthy, and sophisticated enough to resist the machinations of the West. They are not just challenging this dominance, but also challenging the suppression of metals prices by standing for delivery. Andy gives the example of countries like India, which imported 600 million ounces of silver in the last 2.5 years, about 1.5 times what they bought last year in the first quarter of this year alone. These sovereign nations stand for delivery, meaning shorts will constantly and brutally be liquidated. Andy also talks about the reasons for the manipulation of gold and silver prices. According to him, gold prices are manipulated because of the metal's inverse relationship with real interest rates. The continued suppression of gold's price helps to keep up the charade that all is well with the economy. For silver, the situation is bigger and runs much deeper. Let's get back to the interview.
Look at silver at $30, still 60% of its all-time high. In 2011 and in 1980 at $50. Ask yourself, why would a half a dozen commercial banks have the largest short position in silver of any commodity traded on COMEX? It's a concentrated short position. There's nothing even close to it. And I think it has to do with silver's role in the military industrial complex, in its need for the building of high-tech weaponry, namely the missiles and aerospace that the Silver Institute conveniently has omitted from their supply-demand fundamentals. Yet I have a friend at the Department of Defense who tells me, indeed, he helped design the Patriot missile and said there's between 13 and 14 kilograms in the tip of every Tomahawk cruise missile. Excuse me, Tomahawk, not Patriot. He helped design it. Told me this. 3 times he's told me this in person. Google it. You'll see something similar to that. But it's omitted in the supply-demand fundamentals numbers for the Silver Institute. And if you believe that the military-industrial complex is as powerful or more so than Washington, then understand this is why they hold it down. And they hold down the price of gold because it's really the opposite of the bond market. It is the opposite of our system. These distortions, these manipulations will all end and end badly. And I think the countries that are now uniting against the West understand you don't have to fire missiles to beat the West. You can just massively stand for delivery and drain the exchanges of all their metals and blow up the bullion banks like JP Morgan, like Bank of America, like Deutsche Bank, like Standard Chartered, like HSBC. And isn't it ironic that HSBC, Deutsche Bank, Standard Chartered, and JP Morgan all showed up for 4 weeks in a row, starting the second week in March? You go to the Shanghai Gold Exchange website, you'll see second week, third week, fourth week, and first week in April. And you cannot export gold out of China, but you can silver. And take a look at the vaults of the Shanghai Metals Exchange since the second week in March when they showed up. It's falling straight down to its lowest level in a very long time. And I believe it's exactly that they're trapped, that they've issued so much paper against these contracts, and these countries are standing for delivery. They're trapped. And if they can't deliver, a bank like JP Morgan, what would happen if they defaulted on billions of dollars worth of silver? Gold and silver aren't going higher. It's the dollar that's losing value globally. And as the dollar loses confidence and loses value, the one measurement of all of this, the barometer of all of it, is gold and silver, which I think will become higher in value than people think possible in the face of a falling dollar, in the face of all the Western currencies, which are losing confidence in a world where things can be completely and totally weaponized against you if you're not on the same, ideological train of thought the way the West is. We haven't seen anything yet. And but again, I want to make it very clear, Danny, that I don't tell people to buy gold and silver to become wealthy. I tell them to buy it because it is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, and through all of this, in a world that is very digital and very financial instrument driven, that the most influential, well-funded, well-informed traders in the world are buying it at a level no one's ever seen.
The East is rising and breaking away from the suppression and manipulation happening in the West. Russia and China have announced that they will run physical exchanges, not the manipulative paper market we have in the West. Andy and other experts are predicting a coming black swan event that will force China and others to completely break off the control of the West and show their power, which will be measured by the amount of gold and silver they hold. They suggest this could be a natural disaster, a cyber pandemic, or anything else. Whatever event it will be, we believe it will finally reveal the mess we've made of the monetary system. It might even lead to the complete collapse these experts have been predicting for ages. Please share your thoughts on Andy Schectman's interview and the constant manipulation of precious metals. Do you agree that gold and silver prices are heavily manipulated? When and how do you think this manipulation ends? Let us know what you think in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.